Welcome to TMS Insights. It's 2024, last day of January, Ben, so we're back into a new year, and the new year started a little shakily in the markets, but it's taken off, and just as we've come into the recording here, a record high for ASX.
Yeah, which has been driven by a combination of forces, but today we've seen a weaker than expected CPI print. So we had a quarterly print of 0.6% growth in prices on the quarter. If you annualise that, you're looking at a 2.4% annualised inflation rate, which is right where the RBA wants it to get it back to. So markets have kicked on the back of that. It's a trend we've seen in America throughout sort of the tail end of 2023, I'd say. Their inflation rate's coming off a lot quicker than ours.
Yep.
They'll be cutting rates by sort of April, May, with 6 to 8 rate cuts priced in this year. So it's a pretty aggressive move. We'll see if it plays out, but it's helping drive markets, as are good US quarterly earnings.
My way of thinking is not necessarily to believe that markets are right, but understand that that's why equities are so strong. We're not necessarily through all of that, but the reads are very encouraging, and you can only take them for what they are, which is good news. And we did expect inflation to moderate. So in terms of equities, we've had earnings news out of the US, and we come into our busy month next month. February being our reporting season. So just some takeaways, because you mentioned it, Ben, the reporting season in the US, again, another good season overall, and justifying some of the high prices we're seeing.
Yeah, look, I think it comes back to the nasty 2022 year that we have, because what's coming through is revenues are growing top line across a lot of the bigger businesses in America, but they're growing against much lower cost bases. And that was a big drive of a lot of the companies over there in 2022. And so, we have Microsoft and Google both reported after hours, both beat revenue expectations. There are parts of it the analysts weren't, slight criticisms, but I think it's also, you got to put it into thesis where these share prices have been incredibly
They've done
strong.
a lot, so expectations
are high.
And we had good quarterly earnings through last year, so to end the year with basically good news was great. And you saw it in other areas, some of the banking space, wasn't across the board, but there's some good results from a lot of different companies. So
absolutely, it reflects the fact, Jez. I think the other thing that's driving markets is a year and a half ago, everyone was freaked about a recession, and both in America and here.
Particularly the US.
They've just printed a 3.1% GDP rate a week ago.
And Main Street doesn't understand how good it is.
Yeah.
That's the thing.
Yeah.
And then you parlay that to here, our unemployment rates are still coming in at 3.9%.
Yeah.
I don't think people actually realise economically how good things are. And so this is why indices are hitting record highs. Now, if we look at our reporting season, we get a couple of early things, and we might talk about, because we'll get into some really heavy stock-specific TMS insights in the next two, which we'll bring in 2 increments in February, as we do in reporting season. But like just a nice early read from something like ResMed, who went through a difficult 2023, but this showed nice quarterly numbers for them. Yeah,
I mean, it was strong sales growth, strong profit growth, improved margins. ResMed last year, it is one of our larger holdings, and we did a lot of talking and listening about Ozempic and the potential implications it could have on the ResMed sleep apnea business. So it just seems to be that classic sort of thing where there was a freak out driven probably by aggressive short selling in America, and a lot of fear around what Ozempic could do for the ResMed business. But ResMed are just continuing to deliver growth on growth on growth each quarter, and the market is starting to take note of that. And I think we're starting to see some short covering, but also last year was healthcare was the worst component of the index last year.
Well, CSL's the biggest piece of that puzzle. And it suffered a little bit on the same thematic, didn't it, with Ozempic, which is worth just stopping for a minute to understand. There was no earnings-related issues.
No.
It was just the market adding numbers together and getting a different outcome. And Ozempic was never going to be a one-way street, was it?
No.
It's created some nasties we know already. It's expensive. and it's not for everybody.
Yeah, I mean, we've done a lot of work into this, so we won't rattle off it all. But to me, it's this classic case where I was speaking to a fund manager. He's like really good, I think, an analyzer of markets, and he said markets can get it right eventually, but they can get the timing wrong completely. And so the good comparable he was talking about was when Amazon announced it was launching into Australia, and every retail stock on the ASX halved that year because the Amazon went, this is going to destroy us. Or Audi with Woolworths and Coles.
Correct.
Do you remember that before that? Yeah. And Amazon actually has continued to grow and grow and grow in Australia, but a lot of retail stocks are trading at all-time highs at the moment.
They've grown more.
Right. So it's it's the market can be right about what's coming, but it can completely underestimate how long it actually takes to play out.
And overestimate the impact in the short term.
Completely,
so, that's good. Now, broadly going into reporting season, we know that, again, is this the same challenge, Ben, I suppose, for the Aussie market in reporting season with high prices across a lot of stocks, that'll be hard to exceed the expectations of the market?
Look, it's tricky because my view on where we are at the moment is we're firmly now in a bull market. The US has reset its all-time high 6 times out of the last 7 trading sessions, and we've hit an all-time high today. So I don't think you could argue it feels like we're now in a bull market. And what typically happens in the first phase of a bull market is prices run and they look expensive for a period of time.
Yes.
And then the earnings start to run. You look back and think the market was onto that.
Yeah.
So I wouldn't be surprised.
Things will look expensive.
Analysts are downbeat, and I wouldn't be surprised if you see some earnings beats coming up. And I think we've already seen, particularly in the retail space, a number of pretty positive trading updates. We haven't seen a lot of profit warnings from businesses going into February. So, as I said, the analysts are basically saying there's going to be no earnings growth across the market this year. So,
and that's unlikely, really.
I think so, yeah.
The other part is the early stages of the bull market are driven by leaders, and we've seen that,
completely.
Hence the major indices.
Yeah.
And they haven't really gone down to small caps.
Completely.
And that's still to come. So that will
small caps are actually, in America and Australia, are still in a bear market.
Now, if you've got interest rates relieving, that there's some real outperformance to come from that. So I think we'll be talking to you in the insights to come about some large stocks and some smaller ones as we take a little deep dive into a couple in reporting season. So look, we'll leave it there for today. We've got a fair bit in front of us and look forward to bringing you all the news of the February reporting season very soon.